are officially live, broadcasting only on onedealaway.com/live. This is Money Matters. My name is Nev, and today is Friday, the end of first week of September. It's September 4th officially. We are entering into Labor Day weekend. So most of us get a long weekend this time around, this weekend, right? Before we have to go back in and deal with stuff. And the exciting piece is when we come back from the long weekend, well, we'll see what Congress will do, if anything. Today's episode is very, very important, almost more important than one yesterday, because we did talk about what's going on with the Fed Reserve and stuff. But yesterday was a very important day. We got labor market information, right? Then stocks decided to just start tumbling, right? Then crypto started tumbling. Then, right? There was all kinds of insano things happening. And today, we get to talk about all of those things. So, if you are interested in figuring out what in the world is going on in the world of money, how do you protect it, how do you grow it, and all of the other things of how do you position yourself for what's coming, today's episode is for you. I do want to welcome everybody watching this live on onedealaway.com. Welcome, welcome, welcome. Unfortunately, our chat broke, so yeah, you can email me. You know how to find me since you're on the website. You can definitely connect with me. Happy to answer all of your questions. Just no spamming, please, and thank you. And if you're watching this on YouTube, welcome to you as well. Do me a ginormous favor, please. Smash that like button. Do subscribe. Do hit the bell. Feel free to comment and put questions in comments as well. I do read, I do respond, and I will answer to you, whether through the chat, if it's something simple, or do a special video because you have requested it. All right, let's do this. All right, good morning. Good morning. Happy Friday to you. Let's continue on where we stopped yesterday. Yesterday we talked a little bit about what's going on with the rents. And as you know and you have heard, is that the rent eviction stuff is basically null and void until end of 2021. But there's one state, and I am certain you can guess which one. Not New Jersey this time around, not New York this time around. It is California. Yes, California came up with their own rules and laws. Let's take a look what they got, just in case you happen to live or invest in California. All right, so California eviction moratorium is a real nightmare for renters to understand, and here's what you need to know. Estimated 5.4 million renters in state must plan to pay at least a quarter of their rent to avoid potential eviction at the end of January. So, after California passed a last-minute bill to suspend evictions just before this month's rent check came due, the federal government announced a moratorium on evictions just a day later, leaving tenants and landlords in the Golden State wondering how to make sense of it all. Experts say largely that California's legislation supersedes an order from the Center for Disease Control and Prevention and will be dominant law in the state. It bans any eviction for back rent owed so far and forces landlords to civil court to collect debts, but requires renters to pay at least 25% of rent moving forward. Basic steps California renters might take to avoid eviction include paying at least a quarter of 5 months' rent, September through January, by January 31st. They need to communicate with their landlords, and as far as the payments, they can either do a lump sum right before January 31st of everything that is owed between September and January, or they can do monthly ongoing, quarter payment stuff. So that's kind of how that works. CDC's order explicitly says it does not apply in places where protections are same or greater, and California's moratorium, which stretches 1 month past the federal ban, does supersede CDC. As such, the experts say you should follow California's law, not CDC's law. Hold on, just a pause because I have a fan blowing and AC's going and it's getting a little chilly. Can you believe that? Chilly? Really? All right, well, that was super simple, right? Okay, so California's Assembly Bill 3088 supersedes any new local moratoriums, but does not override those the California counties previously passed, because every county was passing its own thing and every city was doing its own thing. And now it's like, good luck figuring out. The best advice that I can give you, which is not a financial advice at all, is seek advice from a legal entity, right? Seek advice, well, from a legal advisor, not a legal entity, sorry, legal advisor. So do find an attorney. It might cost you a little bit, but you don't want to get yourself in a hot water doing the wrong thing. And so, that's kind of the best advice I can give you, because it's just so mucky and yucky. Unpaid rent from March to August cannot be used to evict tenants who declare financial hardship, which you just, look around. Everybody can do that. But for September to January, tenants must pay a quarter of their rent. Okay, we covered that piece. As for what recourse landlords and homeowners have if they're struggling to make mortgage payments, owners of up to 4 properties or units may apply for forbearance to delay their payments. Not forgiven, just delayed. Kicking the can down the road. So, here's what they have to say, and I am kind of agreeing with the whole thing. The immediate threat of eviction of possibly millions of Californians has been averted for now. Of course, this is inflicting pain on the landlords, but who gives a crud about the landlords, right? I mean, they're the evildoers in this whole thing. Down with the landlord, right? Um, I kid, of course. I kid, of course, because this is just an absolute horrific and horrible piece that is quite happening. And, my heart goes out to all of my, fellow landlords. But like I said, the best advice that I can give you is, look for ways where you can get some relief, whatever that may be. So forbearance, it's not perfect, but hey, if it gets you to save what can be saved, and if it makes sense to be saved. And here's the thing that I'm going to also say, again, nothing that I share here with you is financial advice or should be used as such. You need to make your own decisions. You need to seek your own advisors, like financial advisor, tax advisor, legal advisor, in order to understand what makes the most sense for you. However, sometimes, not always, but sometimes walking away is better than trying to save something that cannot be saved. I don't know if that makes sense, right? So when this whole pandemic hit, right, when the beer overflow came our way and nobody wanted it, uh, I had to sit down because I own properties as well and face the music, so to speak, to say, all right, well, if payments don't come, what do I do? What is my plan, right? And you might have done that, and maybe you haven't thought about it at all. And so now might be a time to sit down and do some calculations, right? And you might need to calculate of, can I do forbearance and what does that look like? And can I collect any of the money? And what does lack of collecting funds for 9, 10, 12 months, right? Because even if it is just all the way, hold up till December, hold up till January, right? Evictions take time in most places. And even in the places where it's super, super fast, it might take you a month or two. In places where it's super, super slow, it might take you like 6 months. So can you hold out for a year, year and a half without any payments, but your payments are going to be coming due? because right now the way that the forbearance is kind of structured is that you might get it for 6 months, you might be able to extend it for another 6 months, right? But after that you kind of have to pay it. So that if we do it right now in September, for example, and we're able to extend it up until maybe, because it's not guaranteed, right? So we don't know, but we're able to extend it until September 2021. Maybe that gives you a little bit of room to get the non-payer one out, to potentially put the payer one in, to start collecting some money. And if they give you this sort of break where they tackle that year of non-payments at the end of your mortgage altogether, it might make sense to do that at that stage, right? And at that point, it's like, all right, maybe it makes sense for me to hold on to stuff. But, if you are unable to get that stuff, or you get it just for 3 months, or you get it just for 6 months, but this puppy is going to last for 7, 8, 9 months, and you've already been bleeding money, and they were like, yeah, you can go to civil court and sue and try to collect, but you can't get blood out of stone, right? So, you might have to spend more money trying to collect money that you're never going to collect anyways. So, so it might make sense for you to sit down and face the music and say, at what point does it make sense for me to potentially walk away and preserve good money? Because you don't want good money to be chasing bad. That's never a good idea in the short or long term. And, one of the things that makes the most sense is you got to cut your losses fast. As painful as it is, which is why decoupling from your properties emotionally makes sense, which is why I don't call a single property a house or a home or any of that stuff. It's a property. Because when you attach something like home, then you're like, oh, home is where the heart is. And like, how do you detach yourself from the heart? Give it a name that is just, it's just business, right? It's just an investment. It's just a tool. It's just an additional piece of it, and decoupling from it. And I get it, right? Easier said than done, but you got to work on it, right? You got to work on it. And so that's the best advice that I can give you, to go out there and start thinking through it and start really decoupling your emotions from your head and start making financial decisions with your head, right? And a lot of that can be done by naming things a little bit differently and by coming up with a written plan that then you just execute on, okay? Anyways, let's continue. While the immediate threat for the eviction of possible millions of Californians and people around the USA has been averted for now, we might need to go in, and eviction risks are merely just delayed and have not gone away. The federal government does nothing to address the massive amount of debt that out of work people are facing, and even in California, renters will be left with huge amounts of civil debt come January, and a systematic fix has to come. And of course, they're talking about on rent cancellation, rent relief, and blah blah blah. And but I'm saying it has to be fixed for everybody, because you can't just look at one side of the coin. The whole coin is rotten, right? It's kind of like you have a rotten apple. Well, you can look at the rot all you want, but you have to fix the whole thing, including why it rotted to begin with. Now I have to turn on the fan because now I'm freaking hot. Oh my gosh. I know, right? Sign of old age. You're hot, you're cold, you don't know what you are. So, anyways, so now we're going to switch gears just a little bit and take a look at what's been happening with the stock market. What? All right. Why the explosive stock market rally is suddenly crumbling? What's going on? What's happening? A red hot stock market may be starting to get crushed under the weight of its own inflated valuation. Dow Jones Industrial Average tanked nearly 800 points on Thursday early afternoon. Nasdaq Composite plunged about 4%. And then we take a look at individual stocks, and we're going to take a look at the charts in just a moment. Amazon, Apple, Microsoft, Tesla, Zoom, Square, you name it, it's down. Sell-off right now makes sense, and it's long overdue. People on the street are saying valuations on big tech names like Tesla have gotten completely out of whack with reasonable expectation on forward earnings. Tesla Wednesday, as one of the largest shareholders, Belly Gifford trimmed its stakes, and billion investor Mario Belli hinted he may soon trim some of his positions on Apple. And then there is raw economic data that hasn't improved much, or at least hasn't turned around enough to warrant the S&P 500 trading at a lofty price forward earning ratio of 22 times. It could be the start of a correction, people are saying. But is it? Well, nobody really knows. They do come in threes, so we're going to have to watch it for today and into next week. But looking at what has happened before hours slash after hours, you could potentially expect another red day. Let me show you. All right, so here is Amazon. As you can see, down almost 5%, right? But don't cry for Amazon, because this puppy in February dropped down to 1900s. Now is at 33 something. Take a look. I mean, don't cry for them, Argentina, as they say. But as you can see before hours right here, it is down. When we take a look at what's been happening in the sort of futures market and that kind of stuff, you will see that S&P is down overnight. Dow down, Nasdaq down, Russell down, crude oil down, gold slightly up, but mostly staying stable. And we're going to talk about that in just a moment. Let's take a look at another stock, Apple. Apple is down well over 8% at this point, because they dropped 8% yesterday, additional 3% after hours slash before hours, depending on how you want to look at it. But again, don't cry for them, because they have climbed up way above their February level, and of course this makes sense. Wait a minute, we have another one, Microsoft. What's going on there? Well, Microsoft down was yesterday 6.2% almost, an additional 1.5 after hours. Again, 6 months, they are doing just fine. But then we got to take a look at the valuations. Take a look at one thing. Look at this. Overvalued. You see this right there? Overvalued. And PE ratio 37.73%. Not all that bad. And the reason I'm pointing it out here with Microsoft is because I have another one to show you now as well. Take a look at Facebook, down almost 4% and then additional 2%. Now it's back to actually near fair value for Facebook, but it was overvalued yesterday when I checked this thing around 6 p.m. P ratio is 35%. All right, keep that in your mind. Then we go into Tesla. Tesla down 9% with additional 6.3%, and PE ratio is 1,054. It was way more when I checked it before. It was like 1,500 something. And it's still considered to be overvalued, right? But don't cry for Tesla, because Tesla, with all of those multiple stocks, is up like over 1,000%, I want to say. And I saw it in one of the articles that we're going to cover and discover shortly. And then brings me into one of the other favorites that also has dumped severely, Zoom. Zoom is down almost 10% yesterday with additional 4.5% after hours or before hours, depending how you look at it. P ratio 484%, 84.5, but still overvalued. But Zoom, when it started to take off, was like over 1,600 PE. That is insane. Absolutely insane. And of course, it was supposed to come down with this stuff. Now, we do have a tsunami of what the Wall Street analysts are saying of what could potentially happen for Tesla and 62 other stocks. So here we go. Let's take a look. Tesla Inc. is the poster child of high-flying stocks during this pandemic year. Shares are up 435% this year and 891% in the past 12 months. That is insane. So congrats if you hold Tesla. Don't cry for 10% down here, because nothing, even the stock market, sorry, Twitter guy, I'm talking about the stool guy, the Portnoy guy that says stocks only go up. They don't. They do come down, y'all. So Prepare for that stuff. Anyways, the shares closed at 447.37 on September 2nd, and the consensus price target among those analysts is 284.97, implying 36% downside for the shares. Which is, I mean, that's huge right there, right? So, not saying it's going to happen. They're just saying, this would be a more fair price right here. So, prepare for that stuff, which would be a huge potential loss. Among the Russell 1000, there are 63 companies with sell ratings outweighing buy rating. Now, I do want to pause over here and mention one thing. When you look at S&P 500, S&P 500 sort of weighs them based off of the market share and all of that stuff. But when oh my gosh, what's his face from Doman Capital? I can't remember. I mean, Doman is the last name. I just can't remember the first name. My apologies for that. But anyways, you can look it up, Doman Capital. But as he's talking, when you're holding a share of Amazon or share of Ford or share of Tesla or share of Zoom or share of whatever, you could care less what the market cap is. You care whether money is coming in or going out, because everything is supply demand. Where there is limited supply and high demand, price goes up. When demand dries up and supply is much higher than the demand, then the price goes down. So you gotta watch, where's the money going? Is it going in? Is it going out? And those are the things that you watch. So Russell 1000 kind of takes 1,000 of the companies, right? And that's what they monitor, as opposed to this loosey-goosey maneuver, like you're in, you're out, that kind of stuff, right? And whatever. So they just take this piece. Now, there's, of course, Wilshire 5,000, I believe, and that's an entire market, maybe even better measurement of the whole thing, but we don't have that over here. We have Russell 1000. So take a look. They're basically saying, look at this. They're saying, well, S&P 500, Tesla is expected to be added soon to it, but it's rare for any S&P 500 to have majority sell ratings, and none do at this time. But then you take a look at Russell 1000. Excuse me, coffee time. And then you see that there are many of them, and let me actually just zoom out just a little bit. I zoomed in so we can actually see the text, but now we can't see the chart. Take a look at these companies right here, y'all. And here's what's going on. This over here, this column right here, where 22, 12, 13, 13, 15, that's the share of buy ratings by analysts. Then over here in this column, 30, 20, 22, 27, 54, that's the sell ratings. And of course, you have the company here. And now you can see how big the numbers are for sell versus the buy ratings. And you will likely recognize, I'm going to not read all of them, but I will scroll down so you can take a look at the stuff, and you might recognize some of the companies that you hold. Look at this, Tiffany & Company. 0 people are saying buy it, 7% says sell. Metler Toledo International, 0 buy, 25% sell. All right. Then we have some of the other ones. Look at this. Ubiquity, 25% says buy, 75% says sell. Should you listen to them? I don't know. But, it's interesting. Franklin Resources, 0 buy, 43% sell. Allegiant, 0 buy, 9% sell. I mean, you can see that there is very, very big difference of what is going on and what people are saying. Again, should you listen to them? I have no clue. I got nothing. I am just sharing with you what I am able to find over here. I mean, 50% of analysts. Whoa, I'm not quite sure what happened. Hold on. What happened? We discovered something new, y'all. We discovered something new. Let's go in and take a look. Ooh, they talk to you about the market cap and stuff, right? So I don't know. How do you go back? Go back. All right. So I don't care about market cap over here. I think what we just want to take a look at, is it buy, hold, sell? Like what are we talking about here, right? So you will see that a lot of the companies over here, 62 in total, are basically being told to like sell, don't buy. Nordstrom, it's interesting that it's sort of not exactly 50-50, but 14-18. That's not as strong of a signal to me that it's really one-sided, right? Not as like 36-7 for park hotels and resorts. But it's interesting that they're holding on to it because Nordstrom is going through bankruptcy, y'all. And it's the one that it was like private equities that bought it and took the equity out, and now there's not much happening. Yeah. So, anyways, I don't know. I don't know that I would, follow this, but it is something to consider and think through. That's one thing that I feel very comfortable saying. All right, MSN Money is saying, hey, let's look at the market summary and look at this. Dow down, Nasdaq down, S&P down, and futures look down. And then we go in and take a look at all of the charts, and as you can see, I mean, Nasdaq. Look at this puppy. I mean, it's way, way, way on up, right? Way above anything else. And so, like I said, I wouldn't necessarily cry for it. Is it a crash? I don't know. Is it possibly start of it? Maybe. I don't know. It's not as large of a move. If it was like a 10, 12%, I'd be like, ooh, yeah, something really big is happening. But, anything is possible. Anything is possible. You definitely want to be careful. You don't want to be leveraged in this particular thing. You might want to be leveraged for some other stuff, but not for this. I actually, interestingly enough, every so often, I do listen to other podcasts and videos and that kind of stuff. And typically, like while I'm going for a walk or like doing some stuff outside, I just put that puppy on while I'm making breakfast and that kind of stuff. So I listen to some stuff, and interestingly enough, I think it's Meet Kevin. So he does pretty good job of like sharing the news and stuff, but I grossly disagree uh, uh, with his statement where he was like, well, you don't want to leverage in real estate. In real estate, I only leverage 30%. And I'm going, okay, like that's a very conservative thing. I can support that. I mean, I don't believe you should leverage real estate 100%, right? So I'm like, okay, that's a very conservative thing. Like, cool. And then he goes, but on equities, I believe you should leverage yourself 60 to 80%. I'm going, whoa, have you lost your mind, man? 60 to 80% he's telling people to leverage on equities? That's crazy. And then, of course, he sells you into these funds and ETFs. I'm like, oh, well, now it makes freaking sense while he is given this really horrible advice to people. I don't think you should leverage on equities. I don't think you should trade on the margin, especially if you don't know what the heck you're doing. Now, if you are a trader who's been doing this for years and you know what you're doing and you're really good at reading the market and you're a really good analyst, or you have a group of analysts that is feeding you information and you're excellent at both fundamental and technical analysis and you can read charts like there's no tomorrow, and you have a 90% ability to be right in up, down, or sideways markets, then sure, go for it. I don't really care. But when you are doing stuff and you're sharing information and people are just trying to figure out, like, what does this even mean? And then you tell them leverage your stock holding 60 to 80%? What the hey is wrong with you? Like, why would you do that? I don't think you should be doing that stuff. That is silly because leverage means larger exposure. And when you leverage anything that has a much higher volatility, you are asking for trouble. So I don't think you should leverage cryptos. I don't think you should leverage equities. If you were to leverage something, it would be long term, fixed rate, long term, fixed rate on assets that barely move. They're not as volatile. They do move, right? Things like real estate, for example, and you also have to be careful with what kind of real estate and where. But it typically doesn't move as fast. It doesn't drop 10% in 1 hour, right? Like Bitcoin did, right? It doesn't go up, 200% in 6 months like Tesla did or whatever, right? Or 400, whatever percent it was. right? It doesn't do that crazy stuff. That's volatility. You don't want to leverage on volatility unless you know what you're doing. Sure, when it goes up, it's amazing because you were like, well, Nev, Tesla went up 400%, in 6 months. And if I had leveraged it 10 times, I mean, woohoo! Yeah, but then it drops 10%, and your leverage of 10 times makes that 100% drop. You don't want to do that. Okay, it doesn't make it 100%, but it does make it way bigger. It pulls you out of the whole thing, then you owe more money than you actually have. So, for that reason, I don't think you should be doing it, especially if you don't know what the heck you're doing. And watching a video here or there, or like putting in one trade one time that actually went your way, doesn't count. Okay? Over 90% of traders lose money and they go broke. Less than 1% of traders actually do excellently, right? So don't, and it takes years for you to reach that 10%, and then even more years to reach that 1%. So don't be thinking that just because you're following somebody like Meet Kevin, which again, I don't have anything against, I just grossly disagree with leveraging equities. Or you follow the Barstool guy, Portnoy, that says market only goes up. It does not only go up, it goes up and down, and it can go sideways. And when it goes down way faster. Let me show you. All right, so we're right back where we stopped, right? Where we took a look about it. Right, market statistics advancing 662, declining 2,783, unchanged 128. So let me show you this stuff, right? So you have inactive or active stuff, and you can see what's been going on. These are the ones that have been very, very actively kind of going up. And you can see that the pro shares of ultra short QQQ, right? That's basically the short ETF or ETN, I can't remember, that is basically leveraged on the short side of it, is up like 15%. Tesla down. Like, these are the ones that have been very, very active. And you can see that VIX, which is volatility index, is up 20%. It was actually 26, 27% last night around 6 p.m. So it has calmed down overnight, right? Then you have, the gainers right here. And you can see, take a look, right? Some of these things, gainers, like, oh my gosh, look at these things that are going up, right? And then you have, where are my losers? What happened to my losers, man? There were losers here. I swear there were losers. Gainers. Losers. Okay? Look at this stuff. I mean, these puppies have gone down 73%. ACPA, I don't know much about it, right? But like 73.5%. Ouch. Right? 30%, 21, 10, 25%, 24 point something percent, 23%. Like, all of these things that, like, these are really, really big losses, right? Now, of course, we have top gainers as well, and these puppies have gone up quite a bit. But, it's very, very interesting. And of course, these are like super small markets. These are also, super small markets over here, because I haven't heard, I would presume, I don't know much about it. So do your own due diligence and research, please. And then over here, you can see kind of what's going on with the positives and the negatives as well, right? So you definitely want to be positive on all of the stuff, or observant, not positive, observant on all of these things. All right. So now we're going to switch it yet one more time, because it makes sense. And one of the things that we're going to point out is that you've seen that the stock market, right? There's crazy stuff happening in real estate. Stock market has gone down. Gold actually has stayed pretty stable. Like, it went down, so you can see it went down from 1960s, 1970s. It went down slightly to like 1930s, but it mostly kind of stayed stable in that 1930s level. Silver did pretty much the same thing right there. However, the gold silver ratio did go up from the high 60s into low 70s. So it went from about 68 when we looked at it last time. I want to say it was last week or maybe earlier this week. I can't remember. To about 72 right now. Now, the reason I bring it up is because something interesting happened yesterday with the cryptos, and that is that they too went down. If you take a look at the 24, you will see a sea of red. Maybe you will see a sea of red. Maybe. All right, hold on. CoinGecko is not playing along. Coin market cap. Let's go with coin market cap. Even though I do like CoinGecko, I don't like the whole like I'm trying to show things and it keeps shifting things on me. So 24 hours, right over here is where you want to focus. I hope you can see that. And it's just you will see a sea of red. There's some green here and there, but it's a sea of red that actually has transpired. And you will see that Bitcoin has actually gone down well over 6% in 24 hours. And if we take a look, so here's the biggest gainers, and there's not going to be a lot of gainers here, right? But the biggest gainer is Cello or Cello, up 11.7%, Flexicoin up 6.8, Digibyte 6, ZB token up 4, Tron up 3, EOS 2, DAI went up. It should be stablecoin, but stablecoins have actually gone up, believe it or not, because I think people are kind of going into it. Elrond 0.37, and then it's just like basically comes to Pax, which is at 0, and that's that, right? So and you will see stablecoins. So DAI, USDT, and Tether are up. I mean, give me a break if that's what's up. And then when we look at the down, I mean, everything else is down. And it ranges from like 25% all the way up. And it just keeps going and going and going and going and going. And so what we're seeing is that Bitcoin has uncoupled from gold, as we'll see from this article right now. However, it seems to be following the stock market. All right. So Bitcoin under $10,000 for the first time in 4 weeks. So merely 48 hours ago, Bitcoin was headed towards 12,000. It even broke 12,000 very briefly, and then situation turned right around. It reversed, took a primary cryptocurrency on a violent trip down to 11.5, 11, 10.5, and a few hours ago it dipped below 10. But now we are above that. So anyways, you saw that. I mean, it just took a dip and took a dive. Bitcoin managed to bounce off, and it's currently trading at about 10,250. Actually, when we just looked at it, it was at 10.4, so it has actually recovered back on up, but it did lose about 15%. That is big. That is huge. Over $130 million in Bitcoin longs were liquidated on the popular BTC margin trading platform BitMEX alone, not to mention all of the other ones. And this is where people were lost. A lot of them might have been leveraged, so they got stopped out and they lost not just the money that they put in, but all of the leverage because now they own it. So they liquidated whatever actually they put as collateral in order to do the leverage trade. This is the reason why I'm saying you got to be very, very careful and know what you're doing. It's if you're going to do leverage, right? And you have to be able to afford to take that ginormous of a risk. Look, for some of these things, and I know what people say, right? Well, you can't have big reward without big risk. That's BS. I'm calling BS on that stuff because smart investors, not traders, smart investors look for things that have much larger potential to go up than they have risk, and then they take small risk for large gain and they spread it out. This whole large risk, large gain, small risk, small gain is BS that they sell you on, and it's not true. I disagree with it. You can disagree with me, that's fine, but my strategy has changed once my mindset has changed about that stuff, and I haven't looked back. because it's not just about making money, it's about preserving money. And when you go out there and you risk everything and you do these crazy things hoping you're going to hit the lottery, well, that's exactly what you're doing. You're gambling, you're speculating and gambling. And that's not investing in my book. I'm sorry. I disagree with folks who say it is. It's speculation at best. And sure, sometimes you have to speculate, but you do it with very, very small, minutia amounts so that if it's all gone, you can just chart it to education and it doesn't cost you anything and your wealth is unaffected. All right? Bitcoin has decoupled with gold as the precious metal has remained rather calm at about 1935 per ounce. It's 1938 as we just saw. However, on the contrary, BTC behavior is in line with that of the stock market. Then they go in and talk about how we had a loss in the stock market. And of course, we just covered that stuff. And then they're talking about altcoins are bleeding out more than BTC. And it seems the DeFi sector is leading this negative trend. Ampliford down 36, SushiSwap 35. This is all down. This is all down. DFI.money, BZX, Balancer, Torchain, Yuma, Waves, Ren, Band Protocol, all down between 25 and 36%. Ethereum has fallen to 385 after another 11% dump. Ripple marks an 8.9% loss. Polkadot is down 4%. Chainlink down 17% to below 12. I mean, everything has gone down. And if you hold any money whatsoever in crypto, you will notice that your portfolio is down as well, meaning the amount that you have. Now, if you have been paying attention and kind of buying smart and that kind of stuff, not following in, then, you potentially are still in the green. However, on the daily basis or the 24-hour period, 48-hour period, whatever, you are likely down because everything is down. Overall, the market cap is down about 15% in 2 days, losing almost $60 billion in the process. So you definitely want to know that and be aware of it. But then, sorry, water. But then the question begs, where is the market in crypto heading, right? Is it bullish? Is it bearish? Where do we go? Well, short term, I have no clue. Long term, I am very bullish on it still. And I look at some of these things and look at the past and say, in previous bull markets, it was not unheard of things like Bitcoin and Ethereum and that kind of stuff to drop like, 50%, 90%, and then just kind of take on. So for me, because I'm in it for a very, very, very long term, I look at these opportunities as great buying opportunities. So if Bitcoin was to drop down to 3,000, you bet your bottom dollar NAV would go in even more. But many of the people probably won't. They will wait for it to go up and then buy. Again, none of this stuff is financial advice. I'm just sharing my thought process of the whole thing. So I look at, Ethereum below 400 and I'm going, it's a good buy, right? I look at Bitcoin at like below 10. I'm like, heck yeah, I want some of that. But typically when it kind of dips really fast, like you kind of have to be watching it 24/7. I don't have time for that kind of stuff, right? I'm not a trader, but for traders, they do that stuff. So, just be careful, right? Just be careful. I wouldn't bet my farm on any one of the things, which is why, I believe in like a little bit of this, a little bit of that, set myself up for bullish, for bearish, for inflation, for deflation, for stagflation, set yourself up in multiple ways. And while, overall, if you do that stuff, you're like, well, it's not going to go up, insanely as much as somebody else in the short term, but in the long term, it prevents you from being completely financially wiped out. And remember, I always say, you got to preserve your capital. Not just grow it, preserve it. Preservation has to be your number one thing because it takes time to earn that puppy, right? So, anyways, but here are some of the bullish news and interesting news around crypto and what's going on there. All right. So the governor of the Bank of England, Andrew Bailey, shared his views on Bitcoin and said that the cryptocurrency had no connection at all to money. However, he did say that stablecoins, on the other hand, could offer useful transaction advantages such as reducing friction in payments by increasing efficiency and speed of transaction at a low cost. If stablecoins and CBDCs could coexist in the same ecosystem, the benefits of both could be leveraged to provide customers with an integrated financial framework that would take technological innovation to the next level. He raised the question of privacy when saying that the digital currencies provided considerable information on how people spent their money when he was asked about the blockchain and having the fiat currency on the blockchain stuff. So he did talk about that piece, and he did say digital payments could entail greater data on users' identities and transactions being centrally visible. The data generated could have huge opportunities for the detection and prevention of financial crimes, but this might be balanced with the risk of surveillance into private financial matters. I agree. So, when it comes to deploying CBDC, Bank of England has been a bit slow in the development phase, adopting a more precautious stance than its counterparts in China and Japan. All right, so that's the view of the central bank over in England, that is saying, hey, we do like this stablecoin thing, and if CBDCs and stable could interconnect, that would be amazing. And I think that that is coming. But I do disagree. I do think that Bitcoin does have value, right? Now, whether, it's all of the value is derived from utility, usability, and human belief. So there you go. Now, Brazil could deploy CBDC by 2022. Look at this stuff. So, central bank president of Bank of Brazil, Roberto Campos Neto, the country has all the necessary implementation set in place for a digital currency issuance happen in 2022, planning to launch an instant payment system for November, right? And an open banking initiative that will hopefully increase competition on a national financial level. And they seem to think that the digital form of the Brazilian real currency will be an equal eventually and the part of future of the country. While Bitcoin and altcoins had no national guarantees, CBDC does. Yeah, sure, it does, and there's definitely benefits to it. But again, they also have an ability to, track you and do all the crazy stuff, just like the Bank of England has shared. Then, final news for the crypto stuff is coming from Switzerland. And Switzerland canton of Zug will accept Bitcoin and Ethereum for tax payments from 2021. As of 2021, the canton of Zug in Switzerland will allow individuals and businesses to pay their taxes using cryptocurrencies like Bitcoin and Ether. Zug is one of the 26 cantons or member states of Switzerland. The state is located in central Switzerland, and Zug is often referred to as Crypto Valley. Traditionally, Zug authorities accept tax payments in fiat currencies, but they intend to add a new payment option to begin accepting taxes in Bitcoin and Ethereum. Taxpayers who decided to pay bill using cryptocurrencies must notify the tax authorities in advance. They would then receive the QR code sent by email, required to make such payments. And here we go. Digitalization of all of that stuff is continuing. And this is incredibly bullish into the future when it comes to our money, our wealth, and what's going on with the crypto world. So there we go. That's it for today. Smash the like button. Do subscribe. Do share. Do comment. And I will see you tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.